In this second module on inheritance tax, we will discuss the application of any exemptions and reliefs. Lifetime and death transfers. Certain transfers will be exempt from IHT and certain reliefs may apply to others to reduce the value transferred by a transfer of the property to which they apply. In fact, there are so many reliefs and exemptions from IHT that accountants sometimes call it the voluntary tax. Spouse exemption. Any property included in the estate for IHT purposes is exempt if it passes to the deceased spouse or civil partner under his will or intestacy, or, in the case of joint property, by survivorship. Inter vivos transfers between spouses are similarly exempt, provided the gifts take effect immediately. Conditional gifts are also acceptable, provided the condition is satisfied within 12 months after the transfer, or the transferee spouse is given a life interest. Trust property. As noted above, a life tenant under an interest in possession trust is deemed to own the capital fund while he is in possession and is treated for IHT purposes as beneficially entitled to the whole of the trust fund, which will be taxed on his death as part of his estate. Therefore, if the deceased leaves his estate to trustees on trust to pay the income to his wife for life and after her death to the children, the spouse exemption will apply to the whole of the estate, i.e. as if the wife has received the capital as well as the income. If the life tenant dies and the trust property passes to the life tenant's spouse, under the terms of the trust, again, the spouse exemption will apply and no IHT will be payable on the trust property.